This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 325 is brought to us by Bybit in a serendipitous moment, almost. Bybit has, or is, adding midnight functionality to its entire ecosystem, so you can trade in private now if you want to. It's a very, very nice add-on from one of the biggest and best platforms out there. On top of that, you can get additional benefits simply by clicking my affiliate link, which you can find down below in the Bybit blog, which can be found in the show notes. Click on that blog, read the blog, make sure Bybit's for you, and then if it is, it should be. Click that link, get yourself signed up, get yourself deposited, get yourself trading, because that's when all the benefits kick in. Like I said, the best just got better because with Bybit membership has its rewards. It is the 10-Minute Contrarian Podcast, a holiday edition. I'm on location, if you can't tell. Back home with the family, and it sounds like I'm broadcasting from a small box. At least on my end, it sounds that way. But I know that holiday viewing across the board, no matter what it is, numbers are going to be down. So what I thought I would do, because we have one more episode left this year, and if you guys recall, the last episode of the year is always my report card episode, which I am very, very much looking forward to broadcasting in about a week. But we got one more left, and I thought, since there's not going to be a whole lot of people listening, that I would give you a bit of an underground treat here and talk about something that I know most people will probably not be interested in, even my audience. The old Contrarian of the Contrarians episode, which I really love, of course, because I've always thought that's where some of the best alpha sits, and only a select few people actually get to have it. Now, interestingly enough, this is not a new position. This is a position that I have held for a very long time, that a lot of you have held for a very long time. And those of you who have been around know I got in right around like the 9 to 13 cent range. I took some profit as it was on its way to $3. It was $3.30, I think, at the very top. I certainly did not take some profit off the table then. It was more in the $1 range, I think. It's been so long, I don't even remember. But I have been a part of this ecosystem for a while, and that ecosystem is the Cardano ecosystem, if nobody saw the title. And Cardano is it's so interesting because it does get a lot of hate from the Bitcoin and even the altcoin communities, which is interesting. I think the reason why they do it and why prominent YouTubers like Alex Becker do it so much is because that community, kind of like the XRP community as well, they're so fervent behind their project that they get very, very sensitive, like a little overly sensitive. And any guy who's had a group of guy friends knows that if you expose that sensitivity to anything, your friends are going to hammer on that for the rest of your life. But oddly, the Cardano community has gotten smaller and smaller over the years, at least in terms of the group of people that will just defend it to the death. And to me, as the self-proclaimed Burger King crown on my head, King of Contrarians, this is a really interesting and actually exciting place to be investment-wise. Now, I want to get ahead of this. If there's going to be anybody in the comments section, just know I see you coming. And also know, I want everybody to know this. You guys know that most of you are in the Bitcoin camp, most of you who listen to this podcast. And when you hear people poo-poo Bitcoin for whatever reason, they almost all of them have the same one thing in common. And that one thing is they just don't know a lot about Bitcoin. Yet, they still want to have a public opinion on it, which I think is insanity. But for some reason, a lot of people go this route, and a lot of people end up looking very, very silly. Oddly enough, though, the problem that I see a lot of Bitcoin maxis make, for example, is whenever you talk about any altcoin, they want to shit on it because their cult doctrine instructs them to do this. But if you were to ask them even some basic questions about the altcoin in question, they probably couldn't answer it. And so in the past, when I've been on some Twitter Spaces back in the day, especially when Twitter Spaces were much bigger, People would, we talk about Cardano and somebody would come up and say some negative things about it. And I would just ask them some very basic questions about what the project does. And they had no idea. They would immediately try to pivot into something else. And I'm like, oh, okay, so you don't have any idea of what this project actually does. You're just listening to other reply guys on Twitter and the little ha-has they have to say about it. Okay, I know where you are in life. You're one of those. So this is my kind of long way of saying to you, hey, from the start here, if you don't invest in Cardano, that's fine. If you don't want to, that's also fine. But if you're going to openly talk negatively about any project out there, just make sure you're staying in your actual lane, and that lane actually belongs to you. And I want everybody to remember, too, that the retail crypto crowd, i.e. the ones that are barking the loudest on social media, is still and will probably always be the single dumbest investing crowd on earth. So when I hear the argument that people are not investing in Cardano, one, that's wrong. Two, when people do lose interest and price drops, I certainly don't see that as a bad thing. And so I should bring this up now, too. I want to get ahead of this. One of the most irritating questions somebody can ask me is, hey, VP, do you still like this? Now, when they say this, it's usually something that I have invested in the past and just haven't talked about for a while. So let me answer this two different ways. One, if you're asking me about something that you don't currently own, like, what do you still think about Cardano, for example, and you don't own it? You might just be somebody who's interested in owning it and want to know if I'm still bullish on it. So just know this. With crypto, I always do my best to let you know when I'm selling, not just buying. And I will mostly do this on X, and you can follow me on X at any point in time. Link is always down below in the show notes of every single episode. But then just also know that if I haven't sold, then I am still bullish. And I don't know how well you know me either, but if price goes down, all that means is I am more bullish because now you can buy more of it at a cheaper price. Again, remember, the crypto retail crowd is the dumbest investor crowd on planet Earth. And that's good for people like us. We are less dumb, and we like to sit back and wait for that crowd to give us lower prices so we can buy more of the things we want. For the last 5 years, this has just been the gift that keeps on giving, and it will probably remain that way for a long time. Now, the form of this question I don't like is from people who do hold Cardano, and they see what they interpret to be the project not moving at the speed they want it to move, or again, they see price drop, and they're pretty much saying, hey, like, do you still like this thing? Are you still bullish on this thing? It seems to really have fallen out of favor. Now, my response to people like that is you should always know what you own. If you're asking me, then you're pretty much admitting you really don't know and understand what you own, and you're waiting for me to tell you. And this is absolutely not okay. I am nothing more than your gateway to contrarian investing concepts and opportunities that may be overlooked. This is where it begins. This is where it ends. The rest is 100% on you. So long story short, don't ask the question. And also know that in the future, I'll be doing a few more episodes like this on some of the positions I've held for a long time, and we'll just kind of check in on them and see what's going on. Now, please don't request any episodes like this. I already kind of have a lineup of some of the projects I want to look at. But episodes like this will be good as almost, I hate to say it, but like kind of filler episodes for when there's not a whole lot going on, or it's a certain time of year. And I can just kind of plug one of these in and say, hey, let's see what's going on with this project. And let's just kind of reset and get caught up because a lot of times price is going to be depressed. And it could be a great opportunity to not only start a position, but to DCA down into a position, which is doing really great things, but just not getting the attention that maybe it should be getting. Because if these projects are still growing and doing the things they need to be doing and solidifying themselves into what is going to be the future of finance and computing and payments, which we all know at this point blockchain is going to be. It's no longer a question, all right? If you want to sit there and say it's not, I don't even know what to say to you at this point. You're betting against technology, which has lost every single time. Second, you will be betting against every large bank and financial institution at this point, and good luck with that. Third, we know if you want to go back to an episode called Dinosaur Coins for the Win, again, if you're just doing the right things and progressing the way you're supposed to, then you're going to get a come up, because every once in a while the market does recognize these players and smart money does figure it out. And the great thing about being in this crypto ecosystem is it gives us such a nice long runway to build our positions. So instead of getting impatient and sour about the slow progression of this whole space, I take the contrarian investing podcast approach to where we have a very long time horizon, and we just keep letting the market who doesn't have that same time horizon, i.e. the dumber market, just give us a non-stop cycle of opportunities to not only find new positions, but to build onto existing ones. So I figure at this point, maybe I should start talking about Cardano. Let's do that. Let's go ahead and start with the bad. Cardano is slow, not in terms of the speed at which the chain operates, but at the speed of how fast the chain develops. And the problem is, I don't know if it's the community doing this or if it's Charles doing this or what, but these upgrades and these forks don't usually complete when people expect them to, which is already adding fuel to the fire of a blockchain that already takes its sweet-ass time. And even though we know as Cardano holders that that's just how it is in this ecosystem, when you see other projects moving along and getting the adoption they're getting, it's natural to get a little impatient here and say, well, you've had enough time to get yourselves implanted and positioned. By now, you should probably be doing more than you're doing. I get that. But how many of you really even know what Cardano is doing right now? And what it's even attempting to do and become? It's not attempting to do and become what most of these chains are trying to do and become. It's completely different. It's attempting to be very singular, actually. And that, to me, is what makes it so intriguing today. Now, one other bad thing before I move on to the good, as far as their DeFi ecosystem goes, the TVL is still very high, but the average usage, if anybody does Cardano DeFi, and we will talk about this towards the end of the episode, stick around for that. But it's very low. People just aren't using Cardano for DeFi right now. They are choosing other chains and other platforms. And to me, as a holder, this is disappointing. But again, in the DeFi world, if you know anything about it, that also means there can be some really great opportunity there as well. But that's really all I have to say about the bad. I would say those are the two major things. You can sit there and probably nitpick deeper if you wanted to. But let's move on to the good. So people want to say Cardano is dead for some reason. Have you looked at CoinMarketCap lately? You really think that many people have lost interest in investing in Cardano? Again, dumb money has lost interest, and that's not only fine, that's good. They'll come back. Smart money is in. And I want to mention one more time, reply guys on X are not smart money. Smart money moves in silence. But you can see what they're doing based on certain things like CoinMarketCap. Cardano is 10th overall on CoinMarket in all of crypto, number 10. And if you eliminate the two stable coins, they would be number 8. Now, people might say, oh, well, that's money that's been there from the start. No, like you've seen the overall market cap of crypto and how much it's grown. If people weren't still investing in Cardano, then it would fall further down the list. But that is not what is happening. Again, smart money knows what dumb money does not know. And the major crypto players in the TradFi world also realize what your average crypto ding-dong reply guy does not. As of right now, there are 3 ETFs in the United States which hold Cardano. Grayscale's CoinDesk Crypto 5 ETF, ticker symbol GDLC. The Hashdex NASDAQ Crypto Index US ETF, NCIQ. And the Franklin Templeton Crypto Index ETF, ticker symbol EZPZ. Outside of the United States, you have 4 options. 21 Shares, Bitwise, CoinShares, and WisdomTree all have non-U.S. ETF offerings. Your ticker symbol there is, for what it's worth, if you guys want to look them up, is AADA, RDAN, CSDA, and ADAW. A lot of people who reside outside of the United States, sometimes rightfully so, will complain that they don't have a lot of options in terms of really great ETFs to invest in. Luckily here you do, and I think you will continue to going forward. But this is 7 global ETFs already which hold Cardano, and you know as well as I know they will not be the last. And I really could just end the show right here and say, look, if you want to go against technology, institutions, and on a more granular level, when it comes to Cardano itself, go against Wall Street, my brother in Christ, be my guest. I will happily choose to remain bullish here. But when it comes to Cardano itself, let's go over again what makes it so unique, because this really hasn't changed. Last time I spoke about Cardano on this show, I pointed this out. It is looking to really be the one, not the fastest, not the most popular, but the most decentralized option out there. And it is succeeding at this. And it has really moved on to attempt to become kind of a glue agent, almost like Chainlink is, but just in a different way. But a glue agent that projects are just flat out going to need when it comes to going cross-chain, when it comes to their partnership with the Bitcoin blockchain, allowing Bitcoin to do things that it cannot do right now. And the development there is just so slow, it makes sense to partner with a project which will not be like a partnership project to where it's one chain or the other, but a project which complements the chain that's already there. So you can be on the Bitcoin blockchain and be using DeFi powered by Cardano and not even realize it. Again, Cardano does not need the accolades here. It just needs to be that thing that other blockchains need, whether it's DeFi, whether it's bridging. Cardano, in a lot of ways, you want to talk about how slow it moves. It already has these things in place, and these things are only going to get better once the next round of upgrades and forks occur, which is supposedly not far off. Again, we'll see. But without getting too in the weeds, that is what it's attempting to do. I made what I think was still a very good comparison back when I talked about it. You guys always know how, like with Chainlink, I always say Chainlink is Intel. Of course, not the biggest, flashiest company, but something every chain is going to need. Now, maybe not every chain out there will need Cardano, but I compared Cardano to Linux, something that your average person may not have even heard of or doesn't even know what it does, but it has been around for decades now and is not a public company, but if it was, you would have made an ass ton of money investing in it. Because it provides technology and services that some of these other big boys just cannot live without. And now, with this new Midnight blockchain, they are addressing an issue which has become very popular, almost out of nowhere in 2025. And thankfully, I'm glad it's gaining traction. It's the aspect of privacy. Like, do you want a world where governments and bad actors can have absolute control over your money and where it goes and what it does? Like that's people's fear with crypto in some ways, to where maybe they can't control your money and take it from you, but they can see what you've been doing with it. And if you're doing things that they just simply disagree with ethically and morally, and we know they will make up the most ridiculous cockamamie things that they all of a sudden choose to believe in. Yet we've already seen this with the censorship measures that were going on back in the late 2010s, the early 2020s, and even now, depending on which country you live in, desperate governments do desperate things, and they will take it out on their people. Privacy is going to become vital, and the smart companies on the blockchain know that. And instead of taking all this time to build privacy ecosystems themselves, kind of like what Bybit just did, they're simply just going to add on things like Midnight. And Midnight is really striving to be the prominent go-to option in terms of a fully built-out privacy chain for literally every company out there. Now, I know I have said before that being a privacy option could put you on a bad radar. Now, what I think this is mitigated by is Cardano founder Charles Hoskinson has been very, very prominent and very active in his role collaborating with the U.S. government. In crypto, I can think of maybe Brian Armstrong maybe is the only person who I have seen do this more in the crypto space. Like Charles is out there. He knows all the big players in the government's crypto space right now. And he has worked with them, and he's had conversations with them. And so this makes me feel pretty good going forward. Now, some people worry that you might have liberals come back into power or win the midterms in about a year. I think we're still going to see a very different landscape than we saw during the Biden administration, to where it was just absolute hostility towards the market. Not because the left hates crypto, but because the left was simply doing what they were instructed to do. But as people in Congress get younger and younger, the support for crypto on both sides of the aisle is just going to continue to grow, and I just don't think you're going to have a big enough majority on the opposing side ever at this point to really make too much of an impact. So all of those things combined make me very optimistic on Cardano and the Midnight project in particular. Now, I could go on about some of the things they're already doing all over the world, but I think I mentioned some of that before, and there's all the major chains out there are doing certain things all over the world. I don't think that makes Cardano unique. I just like to say that because people think that some of these chains just aren't doing anything. And just because they're not doing anything in your country in particular right this moment doesn't mean they're not useful and they're not being used currently for really, really great things. But again, if you did 2 minutes of research on any of the major blockchains out there, I think you would see this same phenomenon happening as well. But a dead blockchain or a ghost blockchain, it is certainly not. It just doesn't get the same fanfare as others, so dumb money does not flock to it the way it flocks to other projects. But that's okay, because smart money still understands and sees it for what it is. A unique and very essential blockchain, which is really positioning themselves very well to play a pivotal role in the future of finance and computing and payments. Now, for what it's worth, I don't want to cannibalize future episodes. A lot of you guys know that all throughout the month of January, I give my outlook for 2026 in certain categories. So macro, precious metals, energy, and crypto. And I don't want to cannibalize the crypto episode, but I'll just say this very quickly. I am very bullish on altcoins for 2026, and there are very clear reasons why this is. But we will get to those reasons when that episode airs, but this is almost my way of saying if you want to build a position here, you could do worse than doing it right now. Not financial advice, don't do anything I say, but the price has dropped quite a bit this year, from $1 all the way down to sitting around 38 cents, and I think that is quite a gift. Cardano always moves when the altcoin market moves, so you're already getting that. And then once in the future people realize what this chain is doing and just how essential it is to the overall ecosystem, this is when things will get really good, or start getting really good, for investors. Because as I mentioned before, you already have the TradFi vehicles in place now, which are open for getting that sweet, sweet TradFi money into Cardano. Maybe not directly, not just yet, but with these indexes, money will flow. And Cardano will certainly benefit from it. Fade this project at your own risk. I strongly feel like this is going to be one of those projects to where the real ones get rewarded many, many times over. This is the type of project for people, the type of people who were investing in silver and silver mining stocks back when silver was at $20 and below. Not the type of people who are only getting interested in silver and silver mining stocks now. Even though I still think those people will do really well too. But remember, I love when even my own audience is sitting there thinking I'm talking crazy. Because these same people thought I was talking crazy when I was talking about silver mining stocks back when they were all bottoming and silver was trading at under $20 an ounce. I want my own audience shitting on me in the YouTube comment section. These podcasts do go to YouTube, by the way. And you can go there and comment and say whatever you like. Disagreeing with me is A-okay. The one thing that I would ask you do is just give me a thumbs up while you're there. That would be really nice. But this thing checks all the boxes, contrarians, of all of the things we look for, including that extra special box of most people, even my own audience, not liking it and or not believing in it. And right now you can get it on sale. Just saying. And also, just saying, the little bonus piece I want to give you here at the end is we talked about the Cardano DeFi system being a bit of a ghost town. And if you know anything about DeFi and getting yield on your products, you kind of want this because when everybody jumps in to your liquidity pool, yields go down a lot. Now, the cool thing about the Cardano DeFi ecosystem is it's still pretty built out, and you have a lot of choices here. Now, I still like to not tempt fate. So when I enter the DeFi ecosystem, I'm more or less just looking for overall yield on a stable coin. So here is how you approach something like this. So it's like Forex. It's always one against something else to where they can either complement themselves or contrast themselves. I don't like putting one token against another unless there is a stable coin involved. If you farm one token against another, you always run into something called impermanent loss, and that's always going to be a risk in exchange for a higher yield. I don't like to play that game, especially with things that are lower cap like this, and they're still volatile, and you just don't know what's going to happen. I just want some really great yield, and you can get that here by using the ADA token and any one of the four major stablecoins Cardano has in its ecosystem. And the only risk you run is the stablecoin itself. Now, these stablecoins in the Cardano ecosystem are lesser known, and they have lower overall liquidity locked into them. So there is risk there, but you get it back in the yield you make. And what's so great about doing it in the Cardano ecosystem is the tokens never leave your wallet. The risk is still there on the stablecoin side, but you have less risk here because unlike most platforms, you're holding on to all of your tokens in your wallet. You're not handing them over to the DeFi platform itself. So there's already less risk there, which I love. But there are four major dollar-pegged stable coins in the Cardano ecosystem. The largest is USDM, which is pegged to the dollar directly. The next one is Cardano's version of DAI. That's going to be DJED, D-J-E-D. That's your algorithmic stablecoin. And then you have a couple lesser-known ones beyond that. You have IUSD, which is from a company called Indigo. I was on their Discord forum for a while. They also have synthetic versions of Ethereum and Bitcoin on the Cardano blockchain, for what it's worth. And then all the way down the line, you have USDA, which as an American, I don't like that ticker symbol at all. That's like the beef inspection company of the United States. I think it's a stupid name, but I just really stick to the biggest one, USDM. I feel like as a stablecoin that probably has the least amount of risk. I think they're all going to be fine. But I am happy staking my entire Cardano bag, and it's a decent-sized bag because remember, I got in early, into this ecosystem. I do it on MinSwap, which, again, I'm mitigating my risk. This is the largest DeFi platform on Cardano. And, these yields fluctuate, but right now you can farm USDM versus your ADA for, what are we looking at right now? I think it's an 11.92% APR. Fantastic. I'm not touching that position, so I might as well get some crazy yield while I'm there. And that's awesome. I've seen this thing fluctuate between about 10.5 to 12.5 over time. And you will have to divide your, I guess, investment. Is that even the right word? I don't know. But you have to split it between ADA tokens and USDM tokens. So you have to do that, which is an extra step, but that's fine. And you will earn ADA tokens and USDM and the native MinSwap token. I don't love the native MinSwap token part because that token does nothing but go down. But all I do is I just check in at the end of the month and I exchange that MinSwap token for more USDM or more ADA. And if you really wanted to get clever with it, you could really invest it into those synthetic Ethereum and Bitcoin products I was telling you about, and just build your ETH stack or your Bitcoin stack that way. But I personally like to take it and put it into stablecoin or ADA and just compound my yield that way. But if you really want some really great underground shit, there it is. And then the further you go, I guess, up the risk curve of stablecoins, the higher this yield gets. So let me look at, if you do the same thing, but you replace USDM with DGED, where is it? There it is. That's an 18.2% APR right now. Now, there's only $507,000 locked in the liquidity here, but it hasn't mattered before. This is still a stable coin. Just when you have this lowered amount of liquidity, because the Cardano DeFi ecosystem is less popular than it probably should be, you get to reap the rewards here. Again, not financial advice. This is still a risk, but a very mitigated risk in my opinion, and a risk I am certainly worth taking with my entire Cardano stack. I'm fine with it. We've had entire dedicated episodes, and we will continue to have entire dedicated episodes dedicated to earning yield on the cash and the positions you already have. Everybody should be doing this. Rich people all over the world do this. And whether you're rich or not, what's great is we can all do the exact same thing, and we should, because it just makes a lot of sense. And these things add up so much more than you think they do. And while we're sitting here waiting for our positions to do what they are destined to do, we can make a lot of really great yield in the meantime. Much better than we could probably get anywhere else on the blockchain without taking additional and very unnecessary risk. And you can do it all right there on Cardano. Yes, that Cardano. The thing that smart money loves and dumb money hates. Still think we're crazy? We're not. We're just contrarians, real ones. And we are still very, very early.